We're 3 hours into trading. It is Tuesday, July 20th. Hello, traders. Let's take a look at the previous day's picks, see how they're doing, take a look at the market, get our bearings, find some new trades. That's how we do it each day. I like to prove to you that the system actually works. We use a systematic trading approach that relies on relative strength or relative weakness if we're going short, heavy volume, and technical breakouts. And you can see here I just got an alert on the SPY breaking out. And you can see that the 50-day moving average was touched. I've referenced this in my previous videos. Touch, 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 touch. And then here we go again. Every time that the market has pulled back to this level, we've seen almost an instant rally off of that low. So these moves flush out bullish speculators. They also force bullish put spread sellers to cover their shorts, and then we run the other way. Now these drops mysteriously have been happening just before options expiration, and I'm referring to the monthly options expiration. So that's something that you want to be watchful of, and you can see that the timing is almost a month apart. So a little curious, something that you want to be very leery of. I think proprietary trading firms know that they can force some of those put sellers to cover just before expiration. So you may want to buy those bullish put spreads back just before expiration. In any event, let's take a look at yesterday's picks. Actually, let's take a look at the pick from last week. I had highlighted Home Depot. I had mentioned that this stock was breaking through horizontal resistance. Look, we're almost breaking through that trend line that I drew yesterday, through that horizontal resistance level. So the stock looked great, then it looked ugly, then it looked great. What the heck is going on? And let's go to a 15-minute chart so that you can see it more clearly. This is the day that I liked Home Depot. You can see it gapped higher. Actually, this is where it was highlighted on Friday, and then it fell apart with the market. Let's do that overlay, and you'll be able to see the SPY coming in hard, and the stock finally caves in. Yesterday, market gaps down, stock along with it, and it couldn't quite recover. Today, looks fantastic again. This is so classic. This is an example of exactly what's going on right now with the market. One day the stock looks great, the next day it looks horrible, the next day it looks great. This is a low probability trading environment. This is not a great time to be doing swing trades. Now, I know there are going to be people out there who go, "Oh, you're a fool. I've been doing swing trades. I'm making a ton of money." I'm telling you, this is not a great trading environment for swing trades that span about 3 to 4 weeks. The market has been gradually floating higher, and you can see that it's had these big drops. And these wreak havoc on those longer term swing traders. If you're long calls in here and you get the market bottom falling out, it takes 2 weeks for the market to recover. That's time decay for all of those call options. If you're an out of the money bullish put spread seller, everything looks great, 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 great. And then in 2 days, not in the course of a week, in 2 short days, we fall 150 S&P points. What the heck? Very difficult to swing trade. So I'm urging you, if you've got that time perspective, go to cash, be patient, and wait. We are going to eventually see sustained market selling that lasts a week or more. I'm not calling for a bear market. I just want to see the market come in. I'd like to see a retest, and then we know for a longer term swing trade, support is there, and we can expect a market rally. Right now, if you're a short-term trader, you better believe that we have been all over these moves. Today, we've been making great money. I've taken about 30 points out of the S&P 500 trading futures. I've posted all of my trades in the chat room. So, very fertile grounds. We're going to take a look at the S&P. I want to go over and take a look at two trades that I highlighted yesterday. Abbott was one of them. And I like that chart on Abbott Daily Chart. And you can see we've got our trend lines drawn. Until the stock breaches the trend lines, we're not getting long. It tried to do so today, but we're going to wait for that breakout. Then you'll have a bullish flag formation here. There's your flagpole, and the stock should be able to continue to push higher. Abbott had a nice start to the day, has not participated in the rally to the degree which we would like. If it had, then our alerts would have been triggered. You can see on a 5-minute chart, Abbott ran up early this morning and it has since pulled back. So nothing going, shouldn't be a trade in that. The bearish trade that I showed you yesterday was Boeing. They had every reason to be bearish on that stock. Let's put up the daily chart. Look at that breakdown through the 200-day moving average. That is significant. So what's the stock doing today? It looks fantastic. Oh my gosh, Boeing looks like it's going to go to the moon. Look at that nice, steady climb higher. You can see how we're through the prior day's high, and now we're starting to fill in some of this gap. Well, that's exactly what's happened with the S&P 500. So Boeing is simply mirroring that price action. However, important distinction. Look at how the S&P 500 has filled in the gap from yesterday. Boeing, not even close. You can see if we put the crosshair up, there is the gap. Boeing is not anywhere near filling in that gap. Let's shift gears a little bit and go to the S&P 500, show you a little bit about trading and how the 10P indicator works and what it was telling us today. It is a critical part to all the trading that we do because it tells us on a day trading basis if we should be long or short. So yesterday we get this gap down. Instantly we know that there's some heavy selling pressure. I had pointed out to you that on this high right here, this green bar, we got an immediate red candle. This is a bearish engulfing candle that really consumed the first 3 candles. That is a key bar right there. That is a warning sign. The next bar starts off and we already take out the low of the day. So you should be short in here. We've got a bearish 10P cross, not a high quality one because it had not gone positive. But in any event, we get a nice bullish cross right in here. So that tells you if you are playing the short side, you should be taking profits on your shorts right here. And if you're a buy only trader or you're looking to scalp, you want to be long in here. There's your bullish 10P cross. Here we start getting into a bearish 10P cross. That tells you danger. Now there's another tell here, and the tell is that this is not a powerful, strong bounce. Lots of mixed candles, green and red. We've got long tails, which shows you that there's a lot of range to each one of the bars. There's selling, there's buying, there's a long red candle, another long red candle. This rally right here, this bounce, is of very low quality. Why? Because we've got mixed candles. That tells you that we are not boom, 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 off to the races, fill in the gap, going higher. It also means that you want to draw your upward sloping trend line here. When that is breached to the downside, it's going to set you up with a good shorting opportunity. And we already know there's a big gap down, so we should be expecting some heavy selling pressure. Now, let's take a look at a bullish formation. So right out of the gate today, we had this gap higher. In the back of my mind, I already know that the S&P 500 has wanted to rally every single time that it's touched that 50-day moving average, just like yesterday. So there should be a lot of pent-up buying, especially ahead of earnings season. So let's see if that bid holds. We want to make sure that there's not a gap reversal. We want to make sure that we don't come back and test the low from the prior day. So we wait a few candles. Okay, doji, doji. Oh, there's a nice green candle right in here. I had mentioned to members in the chat room, if we take out the high from the prior day, which is right here, and we do so on the first shot, and we do so with ease, we are going to want to buy. We already have a bullish 10P reading right in here, so we want to buy. Well, the market runs higher, and then we're watching this retracement right in here, and I had mentioned to members in the chat room, we want half of this long green candle preserved. It was preserved. We never got close to touching it. And this was only a 3-bar dip, actually a 2-bar dip. There's your high of the day, 1-week bar. We can't really add to it. And then the next one is off to the races. When you have 3 long green candles like this and a doji in between, what is that telling us? That's telling us that all the gains from this bar held. These bars are stacked, meaning there's very little overlap. So when you get that close and that open are the same and there's no tail under body, that is an incredibly powerful, powerful move. So look for this, not just in the S&P. This is what you want to look for when you're trading a stock as well. Then you have a doji. What did this doji tell us right in here? Doji meaning that the close is very close to the opening price. Well, during that bar, we retrace a little bit, not halfway on this long green candle. That tells us that buyers are still engaged. If we were able to retrace down to the halfway point, okay, there's a little bit of selling pressure, but as long as we finish close to the close from this long green candle, everything is still intact. Now we want to see follow through, and then boom, the next candle is a long green candle. These are very, very strong candles, and it tells me that the first dip will be bought. There's your first dip. Only took 2 bars, and then whoosh, we're back off to the races. Hopefully the technical analysis that I've just shown you is going to help you stick with your stock trades longer, because you'll recognize that this is not going to turn into a long red candle here, further selling, selling, selling. You have to wait. Yes, we preserved that halfway point, so I'm still sticking with the trade. Oh, a doji here. Okay, let's see what happens. Now we're off to the races. If you had have sold here, you'd have been pretty upset with yourself up here. Now we get this long green candle. What happens now? Well, we got a little poke higher. Yes, this is a bearish engulfing candle, but look, the close of that red candle is still at the top of this long green candle here. In fact, if I combined this candle and this candle, the green and the red, I would have a doji on a 10-minute basis. Then I would have another doji. So all of these gains from the day, if profit taking was prevalent, you would see the market reverse. Smack, 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 smack. But the sellers are very passive, the buyers are very aggressive, so it never gets a chance to unfold, and then we have another liftoff. Now, what I've been mentioning, and the reason that this is so important on the S&P 500 is when the 1OP indicator comes into play, we have a bearish cross right here. Bearish cross does not mean short. Bearish cross means wait for technical confirmation, because when we have a very, very strong uptrend, as I've just pointed out, then we have the likelihood of a bullish divergence. A bullish divergence is when the 1OP indicator is falling. Normally you would expect the market to fall. When it is falling and the market is rising, it is another confirmation that this trend is super, super strong and that you need to stay long. Well, as this is falling, we know in here this is going to be a bullish divergence. We get another cross right in here. This is going to be an excellent cross when we have a bullish divergence like this with the 1OP indicator falling. We know that the next cross, 1OP below zero, red line above blue line, we know that that next cross is going to set us up with a really good long. Boom. There we go. This indicator is what sets the table for all of our day trading. And as I've mentioned to members along the way, I was in on the S&P 500. I took profits right in here. I saw that we were holding this low right in here. I knew that we were going to, in all likelihood, get a bullish divergence and that these candles were super strong and that the first dip would be bought. So I got back in here. Then I rode it higher, took profits in here, waited for that dip, got back in here, took profits in here. So that's how we trade the S&P futures, but you have to be more cautious when you're trading futures. You could say, well, Pete, why the heck did you even get out if you knew that all of this was shaping up? Why don't you just buy and hang on to it? Well, because the S&P 500 is very choppy. It's all over the board. It's very, very sensitive. Now, if you find stocks with relative strength that are just go, go, you can easily ride out these storms because they don't have those pullbacks. The S&P 500 does not go straight up, but sometimes you get into the right stock, they do go straight up. So when you're seeing this little dip in the S&P and you're watching a stock and it's going tick, tick, tick higher, you can weather this storm. You don't need to get out of it. And then when you get that next leg of the rally, the stock takes off like mad. I'm going to try and find a good stock that I can show you where that's the case. Actually, we'll go into DOCU. It's on the Pop Bull search that we have, and we'll take a look at these. Go into swing trades, Pop Bull, fantastic search for day trading and swing trading. These stocks are setting up well for swing trades. DOCU is your pick of the day. You can see how early in the day, stock comes up, makes a higher low, and now we're off to the races on extremely heavy volume. And look at that daily chart breaking out through horizontal resistance. This is a very strong daily chart that tells me that it sets up well for day trading. I just need to look for those entry points, like right there. Bullish flag, boom, you're in there. Right here, got another bullish flag formation, but the selling was more pronounced. How do I know that? Because it took a lot longer. Look, this dip was brief. Brief dips equal strength. Long dips equal weakness. So this is a longer dip. I'd have to be a little bit more careful buying this bullish flag. I'm going to put up mRNA. You've heard me talk about that for the last couple of weeks. And here you can see another example where it tick, tick, tick higher. Hardly any pullbacks in here. So you can stick with it. Now you get a drop right in here. No problem. Right back on the high a day. Aha. But now we have a double top. What's the market doing? Grind, grind, grind higher. What's mRNA doing? Drifting lower. That is relative weakness. Boom. There you got your drop. It was already signaling to you, got a double top, lower high, relative weakness. You can already see it unfolding right in here. If you short it up in here, you're really happy. IBM is a stock that I shorted this morning, came out with earnings, looked fantastic out of the gates. Like, oh yeah, baby, here goes IBM, big blue. Long green candles stacked, one on top of the other. Fantastic. This looks great. But all of a sudden, at the high here, if you would have bought this thinking that IBM's going to go to the moon, first of all, you should be looking at the daily chart. And when you look at the daily chart, you realize that, oh, gosh, right here's where the stock opened, the beginning of that red bar. I have a downward sloping trend line, and I have the 50-day moving average, two resistance points in the way. And when the stock started to reverse, it was very easy to see that it was weak relative to the market. Let's put up the SPY overlay. Market, up, 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 up. Well, the stock initially ran higher, but look at this stretch right in here. See what's happening right in here? See how the stock is pulling back? See how the S&P is rallying right in here? Any stock that is going to go higher should be leading the charge, not falling back. And then here's the halfway point of this long green candle right in here. Breached. Oh, well, that's not good. What happened there? Market was moving higher, and now all of a sudden this stock's starting to give back a substantial part of its gains. This is where I shorted it with the notion that at very least we would test the low of the day. Well, lo and behold, look what the market's doing. Run, run, run. Now we take out the low of the day, and I'm not going to count these tails here. You could, but I typically go with the body of the candle. and now we're below the low of the day. Beautiful short right here. Stock takes out the low of the day, likely to fill the gap. Market strong, stock weak. Beautiful little short. You don't need to be shorting the market when you've got the market wanting to go higher. But let's talk about the market right here. Let's talk about what I see. First of all, we've been able to easily fill the gap. This is a very, very strong move, but there are signs that it's starting to weaken. What are those signs? You're starting to get some red candles in here, some tiny bodied candles. When you get one of these green candles, you don't stack them any longer. You start seeing some little retracements and little pullbacks. Eventually, the market will start to crown maybe later this afternoon. The gap has been filled. So I believe that you're going to start seeing some resistance in here. Does that mean short? No, it doesn't mean to short. It means that if you're trading from the long side, you've got to be a little bit more cautious. You should be in profit taking mode rather than trying to continue to ride out all of the gains. And what you can do is you can start setting up some parameters that would tell you when it might be time to short. And so here you've got a nice upward sloping trend line here. You can connect that, you can connect that, you can connect a couple of other highs here as well. And I'm going to do that because I want to show you that if you've got, and there's the top of a candle right there, a nice upward sloping channel like we have right now. I'm going to draw the lower end of it, and then I'll show you how to trade this. Click there, click there. This is the channel that I'm referencing. So it's not perfect, it's not beautiful. It probably would draw a little bit better if I connected this point with this point, but the concept that I'm trying to show you is that there is a nice trading channel. Well, if the S&P 500 puts together a couple of long green bars that poke through the upper end of this line right here, that will probably be a buying climax. And you'll know that because that long green candle is sellers finally throwing in the towel, buyers jumping in, speculators coming in. And then if that long green candle is instantly reversed, I see a bearish engulfing candle, or I see a bearish hammer where the tail is above the body or the wick is long, then I'll know that that is a buying climax and that the market is likely to reverse and give back some of the gains. That will set up some day trading shorts. Now, at that same time that that happens, I would love to see a big rally in 1OP, and 1OP starts rolling over as that long green candle through the upper end of this channel sets up. Will it happen? I don't know. I'm going to wait and see if it happens. If it does happen, I'm going to be on high alert. I'm going to be very, very excited because I'll know a really good shorting opportunity is setting up. Which leads me to my next point is you should always be trying to visualize what it is that you think the market is going to do and which scenarios would prompt you to be more aggressive with your trading. If we just kind of chop around and do nothing, you should be relatively passive. If you paint some scenarios in your mind that would set you up with a fantastic trading opportunity, and if by chance they unfold, then you should be ready for action. So yesterday we get this big market decline. I traded S&P here and there yesterday, but in total I lost about 4 points. Not a lot, but I did lose money trading the S&P yesterday. This is not good trading in here because you get long in here and then whap, you get one of these drops like this. All your profits from the last 20 minutes are pretty much gone and you're wondering, am I going to get the next leg down? So very nervous, very tenuous trading. In here, you could try and pick a couple of these bottoms off, but as soon as you get in, you get these sell-offs, rally, sell-off. This is a low probability environment. So once this move was over and we started to be range bound, I stopped trading. I was very, very passive, and I knew that if I was patient, this drop in the market would set up an excellent opportunity. And that opportunity came today. So there are certain days when you don't want to be real active in the market and other days where you want to be swinging for the fence because probability favors you and because the setups are so strong. So these were some of the key bars that you needed to be aware of today. I hope that this educational lesson helps you navigate the market. And if you can navigate the market, everything starts with the market, then you're going to have a lot greater success finding excellent stocks and being able to stick with those positions. And you can see how IBM is continuing to come in hard. So this is a case where stock comes out, earnings overnight, everybody's excited about it, they beat the number, they run it up, and there are IBM holders, shareholders who go, thank God that reaction was good because I'm going to sell the living heck out of my position. I'm getting out of Big Blue. So they just keep nailing it and unloading their stock. That's why you get this type of steady selling pressure. I don't try and rationalize the numbers, by the way. But Pete, their earnings were so good, and my gosh, this is such a new opportunity for the company. You just gotta like IBM. How come it's selling off? I don't know. I don't care. I'm trying to follow what the big money is doing here. And when I watch price and volume, this is all I need. The big money's getting out. I'm going to short it. I'm trying to follow that trail of breadcrumbs. There are absolutely horrible stocks. If I looked at the balance sheet, the financial statement, the revenues, there's no way I could possibly buy these stocks. And a classic example was back in 2020 when the cruise lines were starting to rally. This is in the middle of coronavirus. There's no way that I could fundamentally buy those stocks. But if I just follow price and I follow volume, it tells me what the big money is doing. And those were some fantastic buying opportunities. So in any event, let's move on. Let's take a look at some of these stocks that are coming up on Pop Bull. These should be some nice candidates, not through resistance, so I don't like it. Docu, that's going to be your bullish pick of the day. I love it. I love that breakout. I love the price action today. Even with this deep trough, you can see how the stock's continuing to move higher. I would be very cautious of the market getting into a little bit of overbought territory in here. As long as this upward sloping trend line is intact, I would use that for my stop. Click alert, click that, click that. Okay, Pete, why wouldn't you connect that line with that line? I could. That would be a much more passive line because it's very steep. And that line would be much easier to violate. And that would stop me out much quicker. I like this breakout. I want to give the trade a little bit more room, so I will pick a narrower trend line. So if I'm long, then I need to exit the trade if this upward sloping trend line is violated. But I do like DOCU. As long as it's above these trend lines, as long as the market's not overextended, I would get long it. Yes, I think the stock can continue higher tomorrow. Pfizer, really choppy stock going to the daily chart. You can see nice horizontal breakout, nice volume pop. It's probably getting some additional strength from the coronavirus variant spreading and the possible need for booster shots. So yes, Pfizer's got a nice breakout and it's got the volume. I think Pfizer is a decent stock to look at for a long position. Oracle, compressing on the high. What does this tell us? Isn't it overbought? Why would I want to buy it up here, Pete? My God, look at how expensive that stock is. I wanted to buy it here, not up here. I'm not going to buy a stock that's this high. If this stock and this rally were a head fake, whap, 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 just like you saw in IBM, sellers would be unloading shares and the stock would completely retrace. The temptation is there to take profits on Oracle, but every seller that comes in is met by a buyer. And the higher the stock goes, the more aggressive the buyers get. Look at that trade volume right there. Oracle's going to go higher. This is a really nice chart, and I believe it's going to have a new all-time closing high. Oracle could be my pick of the day as well. I really like that pattern. I like the compression and I like the breakout today. The other tell is this. Remember how hard the market got hit the last 2 days? Let's put up the 10 SI indicator and we'll put that on the chart so that it's easier for you to see. You can see how the stock has not been able to get through resistance, but it has been strong relative to the market. So if I take a look at what the stock has done when the market pulled back, 10 SI above zero equals relative strength. This stock wants to go higher. Let's put up the SPY overlay, might be a little easier for you to see. Here's the market the last 2 days, Friday and Monday. Wham, wham, wham. Stock didn't even budge. Didn't even budge. You hear me say it often. It's a trading floor term. How many more you got? Meaning, I'm the size here. I'm the buyer. Oh, you want to sell some? How many more you got? How many more you got? How many more you got? I'll take everything you got. That's what this type of chart is telling you. I like Oracle. Let's make Oracle the pick of the day. You can take either one of them. You can see here, we're getting a long red candle on the SPY. Never quite made it up to the upper end of that trading channel. Don't know if this is going to be where we roll over or not. It could be. I've got my upward sloping trend line drawn on the SPY. We'll see what happens. The gap has been filled. Let's go down to the next chart. Home Depot I already showed you. I liked it back in here on Friday. I highlighted it as a stock of the day, but the market's selling, pushed it back. Stock sold off Monday, but yesterday, horrible market day. S&P futures down 90 points at one time. It holds the lower end of this compression and it holds the 50-day moving average. Those would be your stop out points for a swing trade. And then boom, we're right back up testing the upper end of that compression. I think Home Depot is going to continue to push through. You can see orange line above zero, relative strength. Final one for today, Target. Just a tiny little blip after a big run up like this. If this were going to be sold hard, you would have seen long red candle, long red candle. That's a sign that the stock is getting very tired. Not this one. Pulled back a little bit, and today, with the market up, it is making a new all-time high. I like Target. Let's take an example with the stock. Now show you what happens. This is the kind of selling pressure. So you rally, rally, rally. Everything's good in here. You don't see any profit taking in here. You get a bearish engulfing candle here. You get an attempt to go back to the high. This is when you can tell that there are sellers. Long red candle closing on its low. Long red candle closing on its low. NVIDIA is going into a stock split, so I don't actually, it may have already split. In any event, the stock split may have been attracting buyers in here, but these are warning signs, and this tells me that any rally in this stock after heavy selling like that can probably be faded. And this is a sell the news type of event. You got all the stock split buyers coming in here. Eventually, they start puking out their position, and that's when you get these long red candles like that. So that's today's lesson. I really like Oracle. I like DOCU. Both stocks I think are going to fare well. They're going to continue to move higher. Please leave your comments and questions in the description area below the video, and I'll make sure to reply to them. This is a very, very good trading system. I hope you take the free trial. Come in and see us do this real time. Thank you. Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.